Now we're going to go to the first panel of 4. So I'm pleased now to introduce an opening set of remarks before our panel. So first, welcome to the stage Alexandra Mihailescu Cichon. She's Executive Vice President and Head of Sales and Marketing at RepRisk, to present some opening remarks for this panel on financial transformation. Thank you.
Thank you very much. It's a pleasure to be here. The topic of the session today is investor innovation. Now, for investor innovation, you also need data. So what I will focus on is on data innovation, for biodiversity in particular. Next slide. So let me start today with sharing some startling numbers, some statistics. 79% of mining projects and 73% of oil and gas projects are located within 30 kilometers of a key biodiversity area or protected area. 20% of extractive projects are located within just 1 kilometer. And knowing that a project is located near one of these sites is an important piece of information, because biodiversity risks are location specific. So it's important that we understand the interface of nature with business and to have the right tools and data for appropriate decision making. Next slide. But first, so why is biodiversity such a critical issue for the financial sector to address? So biodiversity refers to the variety of plant and animal life on Earth. It underpins the health of the planet in multifaceted and complex ways. Now, COP is primarily about climate change, but climate change and biodiversity are inextricably linked. Biodiversity provides ecosystem services such as carbon regulation and climate regulation. And while biodiversity loss exacerbates climate change can also lead to further biodiversity loss. And I think we can all agree that in the last few years, it's been well accepted that climate change is a material financial risk. So by extension, biodiversity should be considered the same. And certainly, that's what the figures show. So the World Economic Forum estimates that about half of the world's GDP, so $44 trillion, are moderately dependent or highly dependent on nature and its services. The World Bank also estimates that the collapse of ecosystem services could lead to economic losses of $2.7 trillion annually by 2030. So anyone who operates in the financial market is by default exposed to this risk. And in order to evaluate these risks, you need data, and you need the right tools. So that's where innovation can come in. Next slide. About 3 years ago, we were inspired by a conversation with one of our banking clients who was looking for a more meaningful way to assess biodiversity risks. And RepRisk Geospatial is the product that came out of that initial conversation 3 years ago. What we did for geospatial analytics is we mapped 65,000 mining and oil and gas projects around the world. So we took their GPS coordinates, we mapped them where they are placed around the world. And then on that mapping, we overlaid an additional layer of data on environmentally sensitive sites. This comes from IBAT. So with these two data sets, these two overlays, you can basically connect the dots and see whether a particular mine or pipeline is sitting at or near a protected area. And when you can see that, then you're better equipped to take a different decision or to evaluate that biodiversity risk in a more meaningful way. This geospatial feature, it sits within our overall ESG risk platform. This is our online database that we started in 2006 as a due diligence tool for financial institutions. So it's all about helping them identify systematically and assess systematically ESG risks for companies and for projects. That database today has over 210,000 ESG risk profiles for public and private companies, as well as 60,000 risk profiles for various infrastructure projects. So basically, with RepRisk Geospatial, you can zoom in and really dig into an analysis of the biodiversity risk for the extractive sector, and then you can zoom back out and then see the overall risk profile, ESG risk profile of that particular company or that particular asset. So it covers the entire spectrum of ESG risks, from pollution to human rights to community impacts to corruption and everything in between. So the result is a powerful due diligence tool that really evolves the conversation around risk, that provides decision useful insights, information that investors and others can use today to embed in their decision making and in their business processes. Next slide. So what do they look like? What do these data insights look like? So here's an example at the project level. So we're looking at the Pascua Lama gold mine, which is located on the border between Chile and Argentina. It's in the Andes Mountains. And this particular gold mine was within 10 kilometers of a biosphere reserve. This biosphere reserve is home to a variety of endemic and very rare species. And what you see here is the clear connection between a biodiversity site and a business activity. Next slide. If we look now at the history of the project owner, if we look at our entire data set, we see that we've recorded 208 individual ESG risk incidents for this company since 2006. 80 of these were severe or very severe risk incidents. And the score, the risk score that we have a risk score that evaluates the ESG risk of a company. It goes from 0 to 100. 50 is the high risk threshold. This particular company has hovered around that high risk threshold since 2008. This project owner also owns or operates an additional 69 projects with similar biodiversity risk profiles. Next slide. So this particular mine has experienced a steady number of ESG risk incidents over its history. So measurable patterns of ESG risks. So what we see here, for example, is in 2013, the mine was fined $16 million for breaches of environmental standards. In 2015, the mine was linked to irreparable damage to glaciers in the Huasco Valley. And more recently, in 2020, a Chilean court decided to close the mine due to severe environmental and social impacts. So the question for you is, what would you have done knowing that this particular company is in your portfolio? And with RepRisk Geospatial, you can see all of these insights at the biodiversity risk level, at the overall ESG risk level, together in one tool. And then you can measure those risks better, manage them better, and take informed decisions. Next slide. So, the WWF Living Planet report, published a few weeks ago, just recently, alerted us to a very dire situation. There's been a decline of 69% in species populations since 1970. That number is a very stark reminder of the urgency of the problem. Businesses and capital markets, however, will not be able to solve the problem alone. We'll need regulation, we'll need legislation, but businesses and investors do not need to wait to take action. Biodiversity risk is financial risk. Safeguarding biodiversity and safeguarding our long-term financial security are one and the same. And data innovation means that we can tackle biodiversity risk, and we can start today. Thank you so much.